Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial and therefore investors should carefully consider their financial suitability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites are digital venues for educational purposes only and should not be construed as an express or implied promise or guarantee that you will profit or that losses may be limited in any manner whatsoever. Users of the information accept sole responsibility for the outcomes of their deployment and wholesale Trader, LLC, and any associated companies, agents, management, owners, and customers harmless without reservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41. Hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made that any account holder is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in the preparation of hypothetical performance results, and all of which can adversely affect actual trading results.
All right, sorry guys, you're not missing much anyway. Whipsaw City, options expiration dates. Markets are just whipping back and forth here. All right, thank you, Van Weldon, for letting me know you can hear me. All right, I'm currently short ES. A couple different strategies here. Just a bark and lick, and I'm going to go short Izzy here in a second off this new event. So we'll go over this stuff here, and then I'm just got whipsawed in YM like no tomorrow because it was my own fault. I'm entering when I shouldn't have been entering. I'll go over that trade here. I already crushed a couple of my accounts so far. So anyway, I took a trade off of ES. The sell ice came in right before the open here. You can see this stuff was overnight, but you see these two blotches of sell ice here, close to 1,000 or over 1,000, and the market did the traditional ATR retest confirm. Algo guy, which is my filter for those trades, bark and lick, was bearish at the time. I think this is too high of an 8. Hold on a second here. That should be all right. I think this algo guy is too high of a setting. We've been moving. I haven't moved these in years, but you know the volatility's been off the charts. Not really this week, but last week. Let's change this to. Still think that's too much, but anyway, algo guy was bearish when I put the trade on, so it's kind of just snapping back and forth here. So this is an exponential moving average. We just use this. I use this as a filter for my bark and lick trades, which are just trading these stop iceberg events no matter where they happen because the edge is inherent in this activity. So I took that short, and then getting whipsawed and came up another stop run here.
RTY ice iceberg LRT 151 contracts.
So off of this, I will take an Izzy short. So this is actually in an important area, the stop run. You can see close to this inflection zone here. It was right there. This is where the market broke down yesterday. And it actually got through this, as far as thesis-wise, it got through this high volume node of this prior balance, and it should have died. It didn't, so that's not, that usually means you're going to get something like that, but we'll see. If it comes back down here, it should get killed. If not, again, when a market should do something, that's a failed balance breakout of that guy. It should do that, so we'll see. You know, it's kind of in limbo here. We got options expiration. It's very, very choppy right now. But, you know, if I were to guess, I would say this thing's going to rip off the page because it should have died yesterday, and instead it did one of those. So I am short because even though my opinion is this is probably going to, and you want to watch out for this trade too, failed balance breakdown of yesterday's balance. I think that's going to happen. My thesis, when I say my thesis, it's just a guess based on structure. I let the real-time volume events tell me what to do, and these are telling me to go short, so I'm short right now. But again, my opinion is long overall, so if I start getting bullish setups, I'll trade double size, but I'm short right now. Short bark and lick there. That was that Izzy zone I just showed you there. There was a stop run into the very edge of that Izzy zone.
Yes, short validated.
So I just took that trade right now, so the stop run was right there. I took that. That's first move out of the event. And then if it does a retest confirm, if algo guy is bearish, I'll put on more bark and lick. So you can see this is trying to pull again. So I'm short 3 different strategies. Yes, I got absolutely whipsawed to death in YM, and I shouldn't have had the trade on 2 different times because I was getting ready for the webinar. I got a hero alerts coming in too. So both times my entry should have been there, and there, and I didn't move it because I was doing something else. I got filled once, and I got out on the hot night through butter. We'll go over what I'm talking about here, but I got out there, and then I put it in again. These were double sized, by the way, because my thesis is short in YM. And I got filled again, and I shouldn't have been filled, and I got stopped out again. So I take like maximum loss on this account when I should have never been filled if I'm watching this correctly. So you always want, if you're using the zone drawing tool or the spreadsheet or my values to where we get in here, so we're always entering these outside of the ATR. So the ATR is the blue line. You got to adjust it until you get filled. So both of these I should have adjusted, and I wouldn't have been filled either time. Instead, I'm down $1,200 on both accounts, and I should have never been filled. The good thing is I probably would have stopped out anyway up here, so I'm happy with that. But I should have never had the trade on, so that sucks. But on to the next trade, I am short ES here, and waiting for. This is probably going to retest again. These markets are just whipsawing to death. So if it does that, I'm going to put on more barking licks. Other than that, these other markets. So this is another example. Yesterday, we did catch this trade, and I took this trade. Failed balance breakdown of that guy, and then a breakdown of that balance, and it got through that high volume node. So I took trades yesterday through that. So again, this should have done that. For this to be ricocheting back here, my guess is we're going to rally. That's just a guess. If I get a short setup and it sets up, I'll take it. But if I start getting bullish setups, especially if it can take out that area that broke down yesterday, then I'm going to take double-sized longs. So just get very choppy. Actually, I wanted to read spot cam here. I didn't get a chance yet. Hold on 1 second. Futures are up 50 BPS heading in today's OPEX. Markets are closed tomorrow. Jobless claims and housing starts up at, that already came out. SPX options expires, so this is one of the reasons it's so choppy. So watch for unusual ES index price movement around that time. So I shouldn't even have been trading. I took double size in these YM shorts. So let me show you what I did here first before I move forward, just so you can see what I was looking at the time. Now we're getting hero alerts. Just gonna see what this is coming at. So usually when you get hero alerts, we actually have a trade for this. If there was an event right now, a bullish event, I would take this trade, or meaning buy ice or sell stops here. So you can see this market, the hero, this is options flow. So these are dealers getting loaded up with options. They have to turn around and whatever way this is trending, that's the way they have to turn around and sell futures, because they're buying the futures as this is the options flow. So they're on the other side of it. They got to turn around and hedge with futures. So they're selling futures right now. But the way this works, when you get the flow alert, as you can see right here, see that flow alert. This was in the S&P equities. Usually when this levels off, the market will turn around. So that's looking like it's going to be bullish as well. So we'll see what happens here. This isn't 100% like anything in trading, but this is we have a trade for this. If I were to get a bullish event or an event in ES right now, so say I got buy ice in ES or sell stops, I would jump in. It's called Floby trade, and I would jump in right in the middle of the zone. So we'll see what happens here. But again, this is looking like it might turn around and rip, but I'm short, right? I'm not getting out of these trades. I'll step out of the trades where I traditionally would step out. So again, I just took an Izzy trade here. Off those buy stops, I got in here. My stop's up here. So this yellow line this is how I trade, right? So I force the market because of all these algos in here. If I'm going to be wrong on this trade, it's got to push back the full ATR. It's got to get through the volume event and push another ATR out of that zone for me to be wrong on this trade. So that's where I will stop out. And again, it wouldn't surprise me one bit if this rips up now because of that hero alert on top of it. And like I said, the markets already look kind of bullish based on what should have happened yesterday. So if I get stopped out of these, so be it. And then I'm going to be taking double-sized longs on any long setups going forward here. I got some sell ice and Russell. I'll come back there. I'm going to get these stops in 54.50. This chop city though right now, and I'm sure OPEX has a lot to do with this. All right, those are all working. I have Izzy, Bark, Lick, Shorts, and ES. So let's see what happens here. We're calling for a short-term top with fixed expiration OPEX since today's close. SPX is down 3%, which invigorates put values in today's OPEX. Further, a 3-day weekend. We think traders are less likely to want to carry short-dated long puts, all positions. This combination OPEX 30-day, then we may be supportive of equity prices today. So this is his thesis of what's going on with the options market. My thesis is based on yesterday, what didn't happen. So he's already saying we may get a rally. Again, this market should have gotten smushed instead it came back. I'm guessing that is going to happen. So again, if I start getting long setups, I'm going to fire on them. Ultimately, SPX near 5,300 leaves us in a bit of no man's land as we see resistance at 5,400, but no material support till 5,000. So 5,400 in SPX is equivalent to. So he's talking about the SPX prices is equivalent to. Up here.
RTY short validated.
It's about 54.30, 32-ish in futures, right? So if we do start to rip, that's an important potential resistance area where there's lots of dealer gamma. So if we do get that, I mean, this is over 100 points away, right? So, but if we start to rip, then I'd be getting out of some there. The point is, he's looking like he's bullish. These markets look bullish as of right now, so I'm ready to. But I'm short, right? Because I can guess all day long what's going to happen. So can anybody else, right? The opinions are like, you know what? I let the real-time volume tell me, and right now this real-time volume, but based on my experience with these stop iceberg events, which is the most powerful thing I've ever seen in futures trading, it's telling me to be short. So I'm short. We just sit here and watch the whipsaw. To the point of no man's land, today's OPEX serves to remove nearby positive gamma, which was light to begin with. You can see as the trace map changes after 9:30 a.m. SPX expiration. That was right at the open, obviously. And the AM expiration contains 50% of total across all index stocks expiration value. Note again that the 9:30 a.m. Eastern, there's no blue on our map whatsoever. Yellow box. This informs us that at current there is no target price zone within 100 strikes or more. So that's interesting. Meaning there probably could just be some free-flowing trade, right? The more options activity that dealers are loaded up at these prices, the more sticky it gets because they got to hedge them. Remember, he's saying there's nothing here. So either whatever way this ends up moving, it's probably going to be a big move out of here, out of this area. If we look at projected change SPX gamma post OPEX, we see that the 4,600, 4,800 remain major support. So that's quite a ways away, but keep that in mind if we move down there. And then he gets into the rabbit hole stuff. All right, so he basically says we could rally today, and again, that's what this looks like. So we'll see if this comes back again. So I've been telling my trade room for week plus now, right? So when this broke down this day, this put on 2 whopping buying tails, right? Built balance and launched out of there. So then I said, when this comes back, watch the high volume node of that balance and watch these buying tails. If it clears these buying tails, then this thing's probably going to come down at least to this high volume node, maybe lower, right? So yesterday you can see right where this stopped, right in those buying tails. So it did get through that guy, but it held. So again, when markets don't do something they should do, we'll watch out the other way for multiples of what it should have done to begin with. So that's why I'm bullish. If this comes back down again and takes out these, then I'm going to be very bearish, and I'll put on double-sized shorts, right? So that's how I trade. Same with NASDAQ. That was NASDAQ. So ES, NASDAQ, they all look the same. So you see yesterday this was Russell. This actually did not violate that guy. Held right at the top. And you're looking at more of a, this is uglier balance here, but this was balance. So you want to watch for a failed balance breakdown of that balance that starts moving higher. So again, I'm going to be trading double-sized longs here if this thing starts moving up in any of these markets. Current stuff though, actually looks like I just missed a trade here. Some sell ice came in. Let's see if Algo Guy was bearish. It's just cross it now. So I didn't miss anything as far as barks and licks, but this did the same exact routine, right? And actually I did miss a trade here. This was a back in black trade. So we have position trades where we're looking for bigger moves. Then we have reversion trades where we're trading back to the volume event, right? These happen all day long. This is the best thing for a scalp that I've seen. This worked perfectly. I just missed it because this is right when I was getting on the webinar, right? So came down, tagged the GEX 5. These are important GEX levels. And you can take the corresponding ATR coming back. Actually, the entry was right at this, but I would have taken it if I saw it. Back to the zone. But this is the pattern, back to the zone, and then I did that. So anyway, and then there was a new event here too, by the way. So I probably could have put on some shorts here. Yeah, I mean, it was a little through this ISNY zone. So again, this is one of my important areas. The market came in here with sell ice. I could have put that trade on, and I just missed it because I was getting whipsawed in YM. So that's already a decent winner. And I missed the back in black there. What I did do here, jumping from market to market. So guys, you know, I understand it's hard to follow if you're new. I'm trading live. I'm trading multiple markets. So, you know, I do this every day in my trade room, but it's still trade live. You can learn the stuff as I trade live, but I put out courses so you can kind of get up and running with this stuff, knowing what I'm talking about. So when you hit this, actually, I'm going to get out of this trade right now. I'll go over this here in a second. But the point is, when you watch me trade, if you understand what I'm doing, then, you know, if you don't understand what I'm doing, your head's probably spinning, especially looking at these charts, not knowing what all these lines are, right? So anyway, I'm going to post this in the YouTube channel like I do every week. This is all my information, including the new trading strategy courses that I've just made. This is the ATR reversion I just showed you in Russell, one of the variations. And then the trading strategies are basically all these different strategies that I go over. So these are all the different strategies, meaning areas I look for SI volume events and the rules around them. So we have these position trading strategies. We have the auto fade where you're jumping in right in the middle of the zone. The rest of these I'm waiting for the move out of the zone to get in or out. And then we have the reversion trades. So that's what I'm covering on these webinars. But let me post this in there. This is everything that I use in my trading. Here's the zone drawing tool that gives you all the values, your risk parameters, everything else based on your account size. Here's my other course. I should probably put that with the other courses. And then all my contact info and then all the links for everything I use. So you get discounts to all this stuff. Apex as well, Pulcini 50 for the code. If you want the whatever discount, I think they're 80% off right now. So we'll get into this stuff as the webinar goes in, but I'll post this in the in the YouTube channel. So there's a comment, Hando, what's CLN? I don't know what you're referring to. Good morning, Stephen. I don't know what you're talking about there. What's CLN? CL is crude, and it stands for July, but we're not trading CLN. Let's go over to gold here. Clarify what you mean. I already missed a trade here. Looks like. Maybe not. Let's see. Yep, sure did. All right, so this was an A+ reversion, right? Now I'll go over to crude what I did there too. So you had an event. So this was one of the 6 distinct SI setups, Stop Iceberg setups. So the sixth wonder of the world, the unicorn, doesn't happen very often. Sell stops with sell ice that usually warrants a down move, just in its own right, just thesis wise, and that's exactly what happened here. But what I could have taken here was an A+ reversion. So we already know these markets come back to the zone, and it hasn't come back yet, but it's about to, because it always does when I miss the trades, 100%. But this was a trade where I could have taken, so we already know the markets revert back to these zones. That's why it's called a reversion trade. It happens all day long in every one of these markets. It's nuts. So this is even better of a reversion where, so this was the one ATR, you can see that dotted line there. If your entry is in front of or into a prior event, and as long as it stops above it, then that's even better a chance to come back to the zone. That's why we call it A+. And again, this is all in that course too. So I could have gotten in, let's just see here, the one ATR was there, yeah. So the stop for the one ATR, that's what these lines are, right? So I know this looks crazy if you're new to this. First of all, this stuff is just algos. This just shows you the order book. They're pulling and putting in orders all day long, trying to whipsaw traders to death. And then these lines, these are the volume events, right? And these lines, we'll go over them quickly. This is the ATR line. So the way I judge these, whether they're bullish or bearish, these events, is if the market could push an ATR out of the zone. That's the blue line. That's that right there. So the current ATR in gold right now is close to 60. That means it's rotating.
DC long retested.
And there's your retest that I missed. So I've already missed 2 trades so far on this webinar. It means it's rotating about 60 ticks every 5 minutes. It's very important to know your current volatility, right? So many traders love to put on trades where they have these static prices in their head. When I trade gold, I like to risk 20 ticks to make 40. Well, that's great, but the market doesn't really care what you want to risk. The market cares about the current volatility. So if you're risking 20 ticks in a 60 ATR market, you're very likely going to get stopped out just on randomness, right? So anyway, the trade, that's the blue line's the ATR. The yellow line's where I would enter longs, right? And then the yellow line on the other side is where I get out of those longs. And then if I'm entering shorts, that's the yellow line, then I put my stop up there. Again, this is the best way that I've determined from watching so many of these how to avoid the whipsaw that you're seeing right now. So then you get in these reversion lines. This is the 1 ATR reversion, which is right in front of the actual ATR. We do that for a reason, because so many times this market will get to an ATR and these algos love to snap it back at the ATR from the volume event. So when there's a question always going on in my trade room too, like, what an ATR from what? It's the ATR from the top of the zone. So when this zone developed with these stop runs, this was a sexy Gexy trade too. I'll go over that. I missed this one too. It's the ATR from the top of the zone. So that means this is about 60 ticks away from the top of the zone. This ATR is 60 ticks from the bottom of the zone. So anyway, the 1 ATR, the entry was there, that just worked, right, back to the zone, and you had this support, not support, but you have traders that are caught here, so that's the whole idea. When it comes back, they want out, whoever held their breath, that helps it get back to the zone too. So this was an A+ reversion that I missed. Hopefully my trade room got it. Your entry was there, your stop was above that, back to the zone. And then I could have taken a sexy Gexy here too. Let me just show you the winner that I did put on. Great example. So the crude a little bit ago, these are Gex levels, these are Menthor Q levels. I use spot gamma and Menthor Q, but Menthor Q's got them for all these other markets. Spot gamma only has them for the equity markets and individual equities. That's why I love Menthor Q, because you get them for crude, gold, natural gas. So in that document I gave you, there's discounts to Menthor Q as well. Hold on, I just want to, before I cover this, I am short ES here, and I'm going to watch one of these Menthor Q levels. These are one of the areas that I get out. You see this put support. This is so delightful. This is unbelievable. I was short twice here on accident, not at the right price. Now the thing's going to get smushed. Very upsetting. This is Dow. I'm not going to get into it, but I got filled with the tick twice, and I shouldn't have had the order at that price, but it's just hysterical how it's the exact price every single time for me. Sorry, it's just me venting, guys. Anyway, I am short. We already went over these shorts, bark and lick there. I'm short Izzy here. I'm going to watch this put support closely. If it starts to bounce, I'm going to get out of a couple of these trades, or a couple of the contracts for all 3 strategies. So in case I'm showing something else here, I'm just going to put an alert if it comes down there, so I know it's tagging that area, and I'll make a decision. Speaking of which, I want to get tick strike going here. This is how I can judge whether the market's going to blow through these areas or not. That's that. Alright, so we'll stay on here for a second. I'm going to try to judge if I'm going to get out of some of these coming down here. Rui, RUI's comment. Market is going down to 52.12. Okay, Rui, that's great. Great prediction. Where do you get in? Where are you stopping out if you're wrong? Anyone can make calls like that all day long, right? And this is exactly what I don't allow in my trade room. Guys just throwing out these rando guesses. Who cares what your guess is? Give us more specifics. 1, why is the market going down to 52.12? 2, where do you get in? You just jump it in here? Did you jump in up at the high? Where is your stop? Like, just random market predictions mean nothing to anybody, right? Unless you're giving your profits to the room and the people on the YouTube channel, no one really cares what your guess is. Give us more specifics on why you think that, and then I'm willing to listen to you and counter you or whatever. But that means nothing. DX for DFox Trader 13. How do you get your stops a nice looking light on the sub chart? Is it sliding? I'm actually using a reset. Some guys use sliding. I did have sliding years ago, but there was a bug at the time, and I switched to reset. I like reset because it's just more defined. These areas are more defined, but they reset at certain time intervals. I use 10 seconds for stops, 1 minute for icebergs. Hold on, I'm going to get out of these if this starts to bounce here. Not all of them. I'm going to get out of. I got 5 on. I'm going to get out of 2. So I'm going to try to judge here. As you can see, the sell bubble here is pretty big. See how I got quiet there? I'm going to get this. I'm going to get out of 2 of these. I got Bark, Lick, and Izzy on here. So the lick trade I will hold, like I don't get out at some of these areas. I try to hold to the major liquidity. So I'm holding this lick trade, and this is where you get the good risk reward. Where other strategies I'll get out if it starts to struggle at these areas. The lick trade is a trade to the liquidity, and that's the biggest lick on the board. Anywhere down here you can see these big long liquidity. What's liquidity? It's just big orders in the order book. You see right there, right? The markets gravitate towards these big volume areas. So my lick trade that I put on off of this, ATR retest confirm, I put a bark, which is blind ATR retest confirm, meaning this could happen in any area. And the lick is the same trade as a bark, but the lick I'm holding until it gets to a major liquidity. So I don't care if this bounces here or not, the full lick trade staying on until it gets there, or I stop out, or I get an opposing volume event that gets me out of the trade. But the Izzy trade I put on, I already got 20 points out of that, and the bark and lick trade, or the bark trade, I got close to 20 points too. So I got out of some here. If it blows through, great. I still have some on. And the lick trade I'm holding down here to another 50 points. So we'll see what goes on. You can see though, if you're really sitting here with your hand on the mouse, you can use this tick strike to help you judge if it's going to blow through these areas. If they're hammering all these Mag 7 stocks, very likely going to blow through. So I got out a couple just because, it is struggling here and I'm on the webinar and I'm hopping from market to market. So if it pops back, great. I got out of some. If it keeps going, great. I still have some on. And I have my full lick trade on there too. Anyway, quickly, this was the Sexy, Gexy, and Crude, one of the only three trading strategies I jump in right in the middle of the volume event. Again, usually I will wait for the move out of the zone to get in the trade. That's just a better confirmation of which way it's going to go versus jumping in right in the middle of the zone. Well, this was at the second highest Gex level, Gex 2, on the board. And this was actually an A+ reversion I just missed here too. I've already missed like 5 trades today, just since I've been on the webinar. Remember we just explained the gold ATR or A+ reversion. So I could have gone in. That was the entry for there. Let's see, maybe not. Let's see, was this the 2 or the 3? Yeah, this was the 3. Yeah, this one was iffy, right? You want to stop. So this is the 1 ATR. This is the 2. This is the 3, these dotted lines. So which one do you take? It depends. Some days the 1s work nonstop. Sometimes the 2s work nonstop. The 3s work nonstop. Whatever one you're going to commit to, you got to take it as many times possible to make the edge play out in your favor, right? Because trading is nothing but probabilities. If you have the edge, you just keep taking the trade. But anyway, even if this ATR reversion was, the 3 was there, but the stop was still in there, so I probably wouldn't have taken that one, but it looks like that's going to work too. So back to the Sexy Gexy. So you see, guys, like I'm jumping from strategy to strategy, market to market. If you've never seen me before, you're like, what's going on here? Let's see how they're hammering this. Hold on. I'll be back here. I just want to see what's going on with these shorts. I'm seriously so upset with this YM trade. I took 2 huge losers. You can see here. It's just so disgusting. It's my own fault because like I said, God, this upsets me. You guys can see it firsthand here. Just brutal. Both of these trades, I took double size because of the thesis. Both of them I should have never been filled at the time. Now it's just free falling. So that's so upsetting to me. Sorry. Guys, so this is my method, right? We talk all the time about you got to figure out in your trading life how you get your emotions out, right? It's not to pretend like things don't bother you. Every trading psychologist that is worth his weight will say the same thing. You don't ignore your emotions, right? You find a constructive way to get them out and move on to the next trade, right? So my constructive way of getting out is just constant talking and bitching, whether I'm on a webinar or I'm sitting there by myself. That's how I get it off my chest, right? So I don't keep everything internalized and then one day go postal on someone. You know what I mean? So that's how I get it out. So that really upsets me because in YM, I really wanted to be short based on what I was seeing, right? Based on the structure stuff. That's a failed. It broke down out of that balance, and it failed balance break out of that. First volume event I get below there, I take it aggressively. Well, I took it aggressively, but both times, because I wasn't paying attention, I filled at prices that didn't even really touch. Because you've got to watch this yellow line. You've got to watch this. I wouldn't have been filled there. See how it didn't tag that yellow line there? But I had my original. I put it in where it was at the time. But you want to adjust it until you get filled, right? So I wouldn't have been filled there. I got in double size. I stopped out up here. This is a different exit, but I got out there, and then it came down again. I'm like, I'll try one again, and I took my eye off the ball again. I'm sorry, this was the first time I got filled, or this one here, and then I went up there and I got stopped out, and then it came back and I put it on again, and I turned my head and I still wouldn't have been filled, and I took another loser, and then here it goes, and then it's free falling. So it's just, I'm not going to talk about it anymore. I've already referenced it about 10 times, but it's just, this is what, based on my thesis, I was expecting, and then I got the real-time volume event that was bearish too, so I wanted to fire on that trade. Instead, I'm sitting here with nothing on and took 2 huge losers. So, all right, well, at least I got the 3 short strategies on ES on. And this continues to, move below this put support. This didn't retest, did it? Let's just see where we're at. If this was another area, I could have got out of some. On here, let's see where we're at. This is not current. That's NQ. So this was yesterday's trade. So one of the rules of thumb too. So I come up with a thesis based on market profile composites too. So composites are just day value areas of days, single days merged together, very powerful areas. But you can come up with a guess or a thesis what's going to happen too. So you can see this market yesterday tried to open up out of here, got inside. What do you expect when the market gets inside one of these? It should get to the other side. If it doesn't and launches out, that's telling you something too. But this is still inside here, and I'm still expecting the other side. So this looks bearish right now. But anyway, I guess this is another area I could probably get out of some. These are one of my important areas that I talk about. It's in the Trading in the Zone document. Actually, I don't have that. I'm going to pull this up here. Give me a second. Because I'm very consistent in where I get out of in my trades and out of my trades as far as important areas. Trading in the zone. So this is it right here, right? So this is out of trading in the zone. I've adapted it to me, right? I pay myself as the market makes money available to me. These are all the areas that I will piece out of my trade as it heads in my direction. Ludwig levels. Market profile composites, highs, lows, point of control. That's what I was just showing you there. I got out of some on this webinar at the Mentor Q level. So these are areas where I will consistently get out. So I try to always hold a portion until we get to the major Ludwig level, which is the second most powerful thing I've ever seen in my trading career. That's the big blue. So I'll try to hold at least a portion of it till it gets there, and or an opposing volume event. So as the market makes money available to me, I'll get out in certain areas, but I try to hold one for the bigger move. So it's either for right. So these remaining contracts, I mean, I'll watch blind level 3 and I'll watch these, but other than that, I'm trying to hold to the major Ludwig level and or an opposing volume event that turns bullish. All right, so let's just kind of hover in there. I already got some at this put support, so we are at the point of the control of that market profile composite, but I already got out of some, so I'm just going to let it ride here. I missed this trade in Russell. This was a Izzy. Yeah, that was an Izzy short. I don't think there wasn't a bark and lick there, but we already missed the reversion. The back in black reversion when it bounces off something comes back, and I missed the short. So of course, huge trade there. And then I wish I didn't do anything with this gold. So we do have activity here in gold. So this is iceberg events at these 3 GEX levels all combined, and these usually mean because you're going to get these dealers hedging here and you'll get a reaction. But this is sell ice coming in at these levels. I'm not taking, this is not a sexy Gexy. A sexy Gexy is when you get a corresponding, so I need to see buy ice on top of knowing the dealers are going to hedge here looking for a bounce, or sell stops. Well, this is sell ice. I know the dealers are hedging, and it a lot of times will cause a short-term bounce, But the paper was selling here big, so I wouldn't take that sexy Gexy. So this was a sexy Gexy I took. I was getting to this before the market started to sell off here. So the market came down with sell stops into the second highest Gex level. I jumped in right in the middle of the zone, and then I got out of one. So this is how I trade it, right? I get out of a portion or half of my trade when you get the dealer reaction right in front of the ATR, and then I let half ride as a position trade because it is a stop iceberg event, and that's when I saw it bouncing off of there and I got out. So that was, at least I caught that trade right before the webinar. So that was that winner. So I take the sexy Gexies in back in black on the book map here. And then the rest are tied to trading strategies based on the Apex. Those are the Apex accounts that I have assigned to each strategy. So that's what this looks like. So these are all my different strategies here. Right. So all the strategies I'm referring to each are assigned to an Apex account number, right? And I have 2 live that both of those I took huge losses in today for no reason because I was not paying attention in that Dow trade that I said I wasn't going to mention again. All right, on the live trades, this is sell ice. So this is gold. I'm going to combine these, right? So you see 176 and another 372 here. They're basically back to back. And I do use reset mode. So what I was telling DFox Trader, so I'm on reset. So you go to here, the sub chart here. This is this thing here. See how I'm on reset mode, and it resets for icebergs every 1 minute. On stops is 10 seconds, meaning just because it cuts off, it's cutting off at the minute mark for the icebergs. Well, it doesn't mean that the icebergs weren't coming in the whole time. I just like to see that, so you got to pay attention. Sliding here, watch. I'll just show you what sliding looks like. I guarantee this whole was one big iceberg. I like reset because it's more defined, especially if I have to draw the zones by hand. So watch. We'll go here and put it on sliding. See that? So it kept coming in. So you can use reset mode. I just like the, you can use sliding. I like reset because it's more defined, and all you do is just combine them. And you got the zone drawing tool anyway. If you have it, this is, I'm telling you, you don't want to be drawing these by hand anymore when we have access to this thing. This is in the Bookmap Marketplace. But anyway, I'm going to combine these zones. And that's how I do it, right? So if I do miss some activity, though, because it announces only threshold, but the zone drawing tool usually picks it up anyway. So that's how I would draw that event. That's step 1. Step 2, where are we at? Meaning what important areas of mine could I take trades off this event? Well, there's nothing here, no IZZs. There's no inflection zone trade until down there. So there's nothing to do on an IZZY. What are areas? So the same areas that I get out of trades that I showed you in that trading in the zone document are the same areas that I will initiate trades for the most part, right? So like Ludwig levels, market profile composites. So again, we're going to see where we're at here, but I don't really see anything. Inflection zones, there's no inflection zone. So basically where I get out is where I look for events to get in too, obviously, right? So let's see here, gold. So I'm not really seeing anything to get out. I mean, this is extreme standard deviation of VWAP. And so many times these algos play reversion to the mean, right? So there's VWAP here. This is 1 standard deviation. Here's 1.5, 2, basically 2.5 or 3. So it is snapping back, but I don't use that to initiate trades. So there's nothing for me there for longs. What I could do here is a back in black, which I'm going to do here. Hold on. So this is 6. I just missed the entry there I had my shot there. So this is a reversion trade, right? I got too many contracts on it. This is too big of a... So you see down here, I'll keep it on, but... So this zone drawing tool is incredible too, because you put in your contract, or what you're willing to risk per trade. So you go in here, let me just show you. Go into Scott Zones, this is the add-on, this is in that document I gave you, it's in the Bookmap Marketplace. You come in here and you put in what your trading account size is, and then what your risk is. So for these accounts, I'm risking 10% of 5,000. I'm risking $500 a trade, right? So this is actually a trading firm activity that I'm trading on this screen. I only want to be risking $500. So that means I could put on 0.6. I just put on one big one. All you got to do is just switch this to micros, and you'd be. Here, I'm just going to do that. Hold on. Oh no, I already have this. I already have it on micros. Okay, that's good. I thought I put on a full contract. So this is going to suck because now it's going to come back. I should have 6 on and I got 1. I thought that was a full contract. I forgot I started this. So just for learning purposes, though, this is what I'm looking at. Again, I have 1 whopping micro on. I was supposed to have 6 on to risk $500. So I watched. So this came up. This pretty much came to the put support and bounced off. You take the corresponding ATRs back to the zone. So if this pops back up here, I'll put on the other 5. I'm not going to chase it here, though. I already chased it down a little bit. We'll put that on right there. So this is just a different strategy. It's more of a scalp. Where you're putting, it is a scalp, where you're putting on the trade at these reversions and you're out at the zone. So again, different strategies, right? We have the position strategies where we're looking for big moves away from the zones. We're ATR reversion strategies, we're trading back to the zone. So you got to figure out your personality and the way you like to trade. Most traders want to scalp because they can't handle sitting through the position trades, kind of like this, right? Like I have this short on, I got out of some, but then it gets really annoying. You think it's going to go, and then it comes back. You think it's going to go, and it comes back. If you're staring at your P&L, then you're getting tortured, right? This thing just came back close to 20 points, right? That's not fun to sit through, but you've got to realize that's just the nature of the markets. So, again, I sit through this as long as I don't get a new event. I sit through it and try to hit my targets. Where is I have an alert firing off here, and it's really annoying. Where did I put that alert? Is it gold? All right, so I just filled on those other reversions here. So then this is the back in black reversion, where you take it. I just put it on, coming back into it. But this is the whole idea. Bounce off pit support, hopefully back to the zone. So I got filled. Now my stop for that is way up here. That's what these lines are, right? So there's the dotted line. Here's the stop. This is the 1 ATR reversion trade. So I'm going to get out of those there. If it stops me out. Other than that, I'm out at the zone. The front of the zone, that's this, we call it mini ATR. It's 10% of an ATR in front of the volume event. All right, so that's working. Say if this were to rip up even further. Actually, can I take an A plus here? No, because it's already got an ATR. We'll cover this stuff as it happens, if it happens. But I could say this rips up to this one. Well, I could put on the 2 as well. All I'm looking for is 1 retest, though. So say this retest right now and I get out, I wouldn't take the 2 and the 3. I'm just looking for 1 retest. But say this rips up to this next one, I'll put on the other one, the 2 ATR reversion 2. And hopefully get both of them back to the zone. We'll see. So again, I'm just hopping from strategy to strategy. Defox Trader, how do you get ATR on there? Is that one of your indicators? Yeah, so the ATR is built into the zone drawing tool. So guys, what I'm showing you here, this is what I use for years, is this spreadsheet. And you get access to this too if you don't want to get the zone drawing tool. So the zone drawing tool is this here. So if you go into this right here, just click on this, Bookmap Marketplace. Here it is in it's the add-on, right? So this zone drawing tool, the Pro gives you all these other things, the ATR reversions, and so on and so forth. So what the zone drawing tool is this spreadsheet on the Bookmap heat map, right? So for years before we had the zone drawing tool, and again, the zone drawing tool was developed by a trader in my trade room called Johan, brilliant dude, figured out how to draw this subchart activity, draw the zones on the chart. So I used to come in here just like this, right? I would come in here, all right, here's your zone. I would have to come here. Anyone who's been on my webinars the last 8 years on Bookmap has watched me do this. So I would come in, say, okay, here's buy stops here. Then I'd have to figure out where they started, right? You can do this by hand, obviously. I did it by hand, and it just takes so much longer. And it's, way more annoying. So I would say it started there, stopped there. You can see this is where these big blue bubbles came into. There's this, and you judge by where this spiked. So I would come in and go to the edit mode, go to horizontal line, draw the top, edit mode, draw the bottom. Then I would take the values and I'd plug them in the spreadsheet, right? So then we'll do it right now just to show you it's the same stuff as you're looking at on the zone drawing tool. So that zone was 40 quarter to 53 40 quarter to 53 36. Then I come over here and I go 53 40 quarter for the top of the zone, 53 36, right? Then I would plug in the ATR, which is very, very, it's the most important thing you can be using in your trading because it's volatility. So when that zone drew, the ATR the chart here. So you can go. The ATR was right around 10.92. You see it down there in the bottom left? It was probably a little higher, 11.66. So let's just put that in. So now you plug that in. Right? And then that gives me all my, and then you put your account size in. So actually we don't want that. We want 5,000 and then 0.10. So that's risking $500 a trade on a $5,000 account. Again, if you're trading, these Apex accounts, I trade bigger size. If you're trading real money, don't trade more than 2% of your account size or you will blow out your account eventually. So now here's all the values. So these are the same values you see. So the ATR was on here at the time. And then the values are telling me if I'm going to go long, here's my entry price, right? And I went short actually. So I went short at 22.50. Well, that is the same price as this yellow line at the time. See how it's 22.75? It changes, right? Because it's changing with the ATR, but it was basically 22, right around 22.50. That's where I took the short. Then when I do go short, which I did, then it tells me where my stop is, 53.75. What's that? That's all the way up here on the other side of the zone, and ATR plus outside this way, right? There you go. It's, at the time it was 53.54, right? 53.75, 54. So all this is the zone drawing tool on the chart. So I had someone in my trader whom I did a mentoring session with on Saturday, and he's like, it took me 3 weeks to figure out why these lines didn't draw. I figured out they drew once the zone came in. Yeah, that's the whole point. These lines, these reversion lines, and the ATR and the entry and the exit, they don't draw until you get an event, and then they always revert. They always draw to the most recent event, right? As far as this stuff, you can still see the prior event, entry, exit, so on and so forth. But this position sizing and everything else is based on the most current event. You can see there's been no event here. Right, so there's your back in black winner, right? So this was gold. You just put this on. All right, that's enough. So what did I do there? Came up to the put support. I took the ATR, for the one ATR as it came back. This is called the back in black. You can take these ATRs aggressively, meaning as they run into the ATR. I like the back in blacks, waiting for it to bounce off something important. In this case, it was a gamma level, and then taking the corresponding coming back. The issue is if you are waiting for, say this one ATR was right here, right? And you're like, oh, I'm going to wait for it to bounce off the put support, and then I'm going to put it on the back in black, which is it's a better trade, right? A higher probability trade because you're also bouncing off something. But it may come tag the one ATR and back to the zone, and you never have the trade on. So you got to decide: are you going to take them aggressively, the ones, the twos, and threes, as they run into the ATRs, or are you going to wait for them to tag something and come back? Most of the time I'm putting on back in blacks, especially in trading webinars, because I can't keep up with these aggressive entries. You got to be really on top of it, and you have to put every single one you see on if you want the probabilities to play out in your favor. That's what trading is. It's probabilities, right? So if you have an edge, which is this stuff is the best edge I've ever seen in my 25 years. That's why you're listening to me, I think. You just keep putting the trade on, because I know over the long run, just like a casino knows when they deal cards, right? They have the edge of the game in their favor by math. Well, I know this is the best edge I've ever seen, so I don't freak out if I have a loser, two losers, three losers. I keep putting on the trade, right? So this was just in variation. Hold on, guys, I'm having some eye issues. Contacts are drying out here. Sorry. All right. Sorry you had to watch that, but it's better than watching me rub my eyes the entire webinar. So that's the reversion trade. This is the new course I just put out too. Right, that explains this in depth. That's this guy here. Or this is trading strategies, maybe. That's the trading strategy, so that's where I'm looking for the bigger moves in important areas, and then this one's the ATR revert. So I just did these. I did these live, too, with people on, so they can ask questions and so on and so forth. So that's the reversion course. So you just saw that. Like, this is the example. This is the same thing I just did, right? Tag the GEX level. This one was the ES, hit the 2, the 1, back to the zone, you're out. Best thing, closest thing to a scalp that you can ever take, in my opinion. All right, what other questions? Ring means risk off? No, it just means I got filled, right? So this is the sound I have on the Bookmap trading. So you guys, you see, I didn't do it. I haven't done anything. I'll go back to that gold trade here in a second. The CS short, they can whipsaw. This is what they do, right? How many traders just got stopped out on this pop, right? They're like, all right, Scott, I'm going short. We put the short on right into the webinar, right? All right, again, these webinars are not for you to mirror my trades. It's to learn how to do this for yourself. Plus, you always want to learn how to do it for yourself because you're never going to be a consistent trader if you're following someone's calls. It's ridiculous, right? Learn how to do it for yourself. Anyway, we put this trade on. So you put that on with me, and you got out of some there like I did. You're like, yeah, oh man, look at this. I kept some on. Boy, this is going to be a jackpot trade. And then you have that happen. And you're like, oh my God, I just watched my P&L. I just gave back 500. I'm out. What do you think these algos are doing? That's what they're doing. They're doing it on purpose. This is a zero-sum game, guys. These guys, see this in here? See this right here? Flashing on and off? They are in here to whipsaw you to death. Bad traders who panic on rotations. That's what they're doing to you. They're making traders panic out. Then they're the ones getting filled on their sales. Then they turn around and push it back the other way. So my point is, my rules based around these help me avoid the whipsaw as much as possible. So did you see me get out of any because this popped back 25 points, 30 points? This was 30 points. No, I didn't get out of any. I got out of when it came down to here, and that's fine. Could this come all the way back? Absolutely could. And then that would suck, but that's, I'm not, those are my rules. And so for me to get out of this trade, it's either going to be the next level down, some more of this trade. I still have 3 on of each strategy, and I have my full lick trade on, like we talked about. I either need to see new areas, an opposing volume event, which turns bullish, and then I'll get out, or else this can come all the way back and I stop out. That's how I trade. And this zone drawing tool just helps traders in every aspect of why traders fail, right? This is what I was talking to Mr. Did he ever answer, by the way? Who was that? Who said we're going down to 52 trade? Ruri. Next SPX level is 52.46 on this. Next target. Okay, great. I see the targets too. Where did you get in? Where do you get out? Where's your risk sizing? So do you see? Like, he's a perfect example of a trader that is very likely not going to make it if he's just making calls, throwing on trades. Like, where's your stopper? Do you just put a trade on and risk $100,000 on it? Like, you have to have an area where you'll be wrong. Where do you get out? So my point is, I'm talking to this guy in the chat, by the way. If you guys aren't following, he's in the YouTube chat. Hold on, I'm still having major problems with my contacts here. This zone drawing tool just clears up so many of the trader errors or mistakes that they make, right? One, it gives you definitive where you get in, where you get out, right? And you're waiting for the event to even put on a trade. So that's the whole edge right there, waiting for these events. So then if I'm going short, I know if I'm going short there at that yellow line, which is just an ATR plus 15% out of the zone, out of the volume event. And if I'm wrong, it's got to come up here, and that's where I stop out. The position sizing, this is the biggest thing. Traders trade too big for their accounts, right? This tells me if I'm going to get in here and get out here risking $500, I could have put on 0.3 of a contract at the time, right? So everything is in here where traders make the biggest mistakes, right? So you know where you get in, you know where you get out, you know what your sizing is. Where it gets subjective on the position trading is where do you get out of your trade? Well, I showed you my important areas, that trading in the zone document. Hold on, I gotta find this damn alert where it's driving me nuts. Oh, is it in here? I'm staring at it. Sorry, guys. All right, that's gone. 1 second, I gotta get more eye drops. I'm struggling here. It's hard to do a webinar when you can't see. All right. I gotta take a breath. So again, Rui, I great calls. Not like no one cares about your calls, right? Tell us why you got on the trade. Tell us where your stop is. Like that means nothing. And again, that's one of the things. Like I will correct. Right? Nobody does in my trade room. I have very little problems with that kind of nonsense, but no one cares about your predictive calls unless you're sharing your account size. Are you going to share your profits with us, Rui? Then I'll love to hear what you have to say, and then let me know when it works and how much you're sending me. Until then, no one cares about your calls, especially if you can't give us a reason why you went short and where your stop is, so on and so forth. So that's what I got to say about that. How do you get an well, first of all, back to the most recent question. The ring was just me getting filled on that gold reversion trade, right? And we got a new event here too, by the way. So I got short, it tagged this put support, came back, I got filled, and I got out right in front of the zone. You can see that's right where it bounced at the time. Now we got a new event. We'll come back there and see what we can do there. So the ding is just me getting filled. So we got some stuff coming in here now, looks like. I'm just struggling with this contact. I can't get the damn. Okay, so this is an example of, see how the zone drawer didn't draw this activity here, because I have thresholds for each market that are trade worthy, right? And yes, icebergs has got to be 700 or more. So these individual events, this is a great example of the reset mode. It cut it off. This is over 700. This was 500. This was another 500. That's 1,000. I'm going to draw this manually. Now I have a definitive reason to get out of this trade if it starts to rip back higher. And I can actually put on a sexy Gexy trade here too. Let's just draw this real quick. So that started coming in right here. This is why you used to have to do every single time. This is another great thing of the zone drawing tool. So wherever this started to spike, see how it spiked right there by ice as someone was selling it. More here, more here. See these spikes here? So I'm going to draw this manually. Zone drawing tool. Let's just bring it down here now. We can adjust it. So the top was right about there. Came down to there, more spikes. Came down to there, more spikes. So if I was just drawing that first blip, this is where it would be. The bottom would be right there. And then the second dose came in. See how it spiked there? So it's down to there. Let's change it. There you go. And then so that incorporated this blotch of buy ice, this blotch of buy ice. So I could put on a sexy Gexy here. I would have already done it if this fired off. I'm going to give this a second now. I'm not going to put it on if it blows through this foot support, right? If it holds and gets back above her, I'll probably put on a sexy Gexy. What's a sexy Gexy? It's just looking for corresponding ice, so we know dealers are hedging here with the corresponding iceberg in that direction. The problem with this is it's already traded into this level and through it a bunch of times. So I like fresh Gex levels, meaning first time down here, you take it. This one's already traded through it, back above it, back above it, back through it. So I'm not going to take a sexy Gex here. But what I am going to do with my position trades, see that now it's coming in even more now. So this will draw automatically and I'll just adjust the zone. So this is how I trail my stops. Now I have a definitive reason. I don't trail my stop based on my P&L because I don't want to get back as I got to make sure I break even on this trade. If it comes back on me, that is ridiculous. The market doesn't care if you want to break even. The market cares about volatility and this activity in the marketplace. So I'm going to adjust this zone now. And I'm just going to make it one big zone because this is literally, obviously, very, very likely the same house. So someone's buying a ton in here. They were buying here, they bought here, they bought here, they bought here. So this now, you see where if I were to go long off of this event, which I might, depending on what areas we have here, but I'm short. So where's my stop now? Now I trail my stop to this event entry. If I were to go long, this is where I'm going to go long, and this is where I'm trailing my stops for my short. See how structured it is, where I'm not guessing and reacting to the market. Oh my God, I can't handle this. Well, my P&L. I know exactly where I'm getting out of this trade. That is at 53. See where it says long aggressive at the bottom? That's this. Where if I'm going to go long, that's where I'm getting in. That's where I'm getting out of my shorts. 53.18. So again, I got out of some down here, but if it pops up, I'm out of the rest there. If it keeps going, great. And then I have other trades I could put on potentially short. 53.18. All right, so that's working. So now, what's the next step? Now I want to see if this is an area where I could potentially. This is a new event. Can I take longs here? This is right into this inflection zone. These are zones I draw every day. So before I forget, so I was talking about that zone. If you don't want to get the zone drawing tool and you want to do it by hand, which I think you're absolutely crazy if you do, but that's fine. I have that. You can get the spreadsheet. Pulcinitrader.org. That's in that document I posted. So you can get the spreadsheet if you want it. It's a little cheaper. You got to do everything by hand. And the ISI zones or a combination. You get this all for free as part of my trade room. You don't get the zone. You get a discount to the zone drawing tool. I give 20% off of that. But if you come on my trade room, you get that for free and you get that for free. But if you can't get in the trade room and you want that, you come to this site and get that stuff. So what I was showing you here, this is an inflection zone. So I draw these every morning for myself and I share them with my trade room, right? So this is where something important happened in the market. So today, yesterday, this is where we had a selling tail here, and I think this is where this gapped up from. Pretty sure. Can't really see right now because of the activity, but this is an Izzy zone. I had it drawn. We have a move into it with the volume event. So if this new event turns bullish, I'm taking an Izzy long. So I'll get out of my shorts. I have Izzy short. Remember I put the Izzy short on up here with that buy stops into that. So I'll get out of my Izzy short and I'll take an Izzy long and I'll get out of my other shorts. So 53.18 is my stop out for my shorts, and then it's my entry for my Izzy long. That's one area. Let's see what else we got. Nothing on market profile composite. We're just sitting at the point of control. I don't put on trades at the point of control. Point of control is just the price that's traded the most in a value area. That's the top of the value area composite. Multiple days merged together. That's the bottom. This is the most traded price. That's why it looks like this. So what this is like statistics. You remember when I took statistics? So where most of the I want to say trade. It's not trades. Where most of the mean, or whatever the term is, where the most happen. Right? I can't think of the word right now. It's been about 40 years since I took statistics. But that's all this is it turned over on its side. And that's just showing you where the most trade occurred, right? In there. So this price is the exact price, the most traded price in that area, right? So I don't put on trades there because that tends to be the most choppy. You can see this is where there's chopping around. I will put on trades at the bottoms and the tops. Very, very powerful areas to put trades on and to judge what's going to happen bigger picture too. There's nothing for me to put on a trade off of the market profile composites. There's nothing for me to put a trade in off the Ludwig levels. The next major Ludwig level is down here near 5,200. So nothing for me to do. The only long I could take off of this is an Izzy long. Again, if this was a fresh move into the GEX level, I could have put like the first time down here and I got this bias activity, I would have put on a sexy GEXy. That's entering smack dab in the middle of the zone, looking for the dealer reaction, and you have the corresponding SI event that helps it as well. But that it already traded up and through here. It doesn't mean this isn't going to hold now, but it's already traded up and through here, so it's not that important. Any area that you're watching and trading, Izzy zones, Ludwig levels, whatever, if it keeps doing that, it's not it's not that important anymore, right? The market's not respecting it. So, all right, take a breath here. DFox trader again. I love the Stops and Iceberg indicator. It changed the game for me on NASDAQ. Just wondering what all your indicators are on top of that. So for me, again, I use Ludwig levels. The stop iceberg level, the stop iceberg events are the driver of my trades because this is the most important volume that you can get. Other than that, it's usually just algos in here whipsawing people or options dealers hedging. That's what we see with the hero flow, right? So I don't put on a trade unless I get an SI event. But then I use things like Ludwig levels, the market profile composites, all those areas I show you. This is all the stuff I use in my trading, right? But you don't. We just got a tick extreme here. So these are all these levels. Ludwig levels, market profile composites, VWAP standard deviations. I don't put on trades there, but I'll get out if it's confluent with something. Spot gamma levels, I'll put on trades off of that. Method Q levels, we've already watched me do that today. Struggle to get through heavy resting liquidity. Predefined zones based on candle structure. Those are my inflection zones, the Izzy zone, same day prior events. So those are the areas I put in trades. All right, so I'm about to get stuff, so something's going on here. This looks like a news story. Surprise, surprise. I can't believe it's against my trade. I think I had the last 55, out of the last 55 headlines, tariff headlines, 52 have gone against me. This has got to be another one, right? Very likely. The squawk, I got the squawk guy off. That's not good. Hold on. That's why I use it. Sorry, trade room. So you get access to the squawk too as part of my trade room. I had it turned down. Sorry, guys. All right, so I just stopped out of those remaining shorts based on a new event, and I actually just flipped long, right? So I'm long. This looks like this is some kind of news, right? Doesn't mean every big move in the market is news related, but I just know these markets lately. The S&P doesn't move 20 points plus just randomly, right? It's usually there's something behind it. So this could be the hero. Let's check out the hero. Meaning this options activity. So there you go. So this isn't that big of a move though. So not in equities anyway. Let's check out S&P 500. This was close to $1 billion. right? So guys, this moves just like a market. Like you can't predict when the option flow is going to come in. At least you can make a pretty sound guess on why. So you see this was negative. So there is something to be said about this. We'll look at this in a second. If this happened, this divergence. But anyway, this just dropped from basically close to 1.5 billion, a little over 1.5 billion to 870. So this moved almost $1 billion notional. When you get those kind of moves, if there's nothing else going on in here, then you get this. This is options dealers. They're getting loaded up. They've got to buy futures. So you get these kind of moves. So this is probably very likely on why you got this spike. I think it's probably something news, but it doesn't matter what it is, right? It doesn't matter. It's happening. You got to adjust. I am now long.
The article in Financial Newsfeed, free to read through. So again, he was it could only be $10 billion for funding for clean energy projects.
He said some. There, I told you, it's some headline, some tariff headline. Surprise, surprise, guys! It's been brutal last month. It's been absolutely brutal. You can't control it. All you control is.
S&P Iceberg by ES 703 contracts.
All right, so now we got more buy ice here, by the way. So I'm long. Now what am I going to do? I'm going to trail my stop to this new event, and there's potential new trades I could put on with this new event coming in. You can see this buy ice. So whoever bought down here did a really good guess on what was going to happen. It's weird. It just corresponded right with that headline, isn't it? Out of nowhere, someone just puts in about, let's see how many this is. Guys, someone always knows something. That's what you got to understand. These markets are completely...
Kremlin, Putin met with Iran foreign minister, cited by IFAX.
I don't know how that's bullish, but whatever. There was some other headline. The point is, somebody always knows these markets are completely manipulated, but that's the whole point. We get to see what they're doing. Remember, icebergs are supposed to be hidden orders. Well, with this information, the CME enhanced MBO data, we can see what's going on. So somebody right before that headline bought, let's see. Let's just take a peek. 713, 603, we got 1300, 1800, 2000. So close to 2500 buy ice came in right before that headline. But I wonder if they knew what was going to be said. It doesn't matter, right? You're never going to guess that. So regardless, if you were sitting here, now I wish I put on the sexy kexy, but regardless, somebody knew. Look at that. Wow, just a shocker, right? It's not a shocker. Doesn't matter. You can't control it. You can control your edge, where you're stopping out, where you're getting in the trade. So I'm in there. Here's a new event. Trailing my stop to that new event. So my original stop off this Izzy Long that I just put on was way down here. We have a new event, so I'm moving it. It was going to be down here near 52.82. Now I'm moving it all the way up to here to 59. So I'm saving myself almost 30 points of risk here based on the new event. This is how I trail my stops. So if this trade comes back, I'm going to lose very little, right? Based on a new event. And then there's other trades we're going to put on here too, potentially. So let me change this stop, 5309.50. I was supposed to be long, I wasn't long there. That's not good. So I missed it. I stopped out, but I thought I put the long in. And of course I could have just got in right there and I didn't. So that sucks for me. So I actually don't have a long in, but if you did get long to Izzy, this is your new stop. What else can we put on here after I moisten my... These contacts suck. So dry. Well, first and foremost, we have an A+ reversion developing, right? So here's the 1 ATR, here's the 2 ATR. As long as the stop for the corresponding ATR is through the prior event, that's A+. We already know the markets come back to these zones with ridiculous regularity. Then you have traders that are caught. So whoever sold in here, they were selling it. See these red bubbles? Red bubbles, that's market order sells. They were selling into mouthfuls of buy ice, right? And it moved away. Whoever's holding their breath here is praying to the Lord Jesus that it comes back here to get out of the trade. That's what helps propel it back to the zone as well. That's why it's called an A+ reversion, right? So the one isn't the entry. You see the stops right at the bottom. I won't. You could. It's real close, right? I want to see the stop through it. That's pushing it. The 2 is definitely, 2 is right in the middle of this prior activity, and your stop's way down here. So the 2 is definitely going to go on 53. And you can see all these prices are over here too. Reversion short entry. Reversion 1 or reversion 2 we want. Reversion 2, where's the long? Sorry, there's a lot of numbers here I know. Right here. 53.0075. That's right here. You can see it on the bottom left there too. And then this gives me my sizing. So if I want to risk $500 on these trades that I already have plugged into this zone drawing tool, I could put on 0.7, actually it's 0.6 for the reversion 2, risking $500. So I'll put that on. That comes back there. Actually, we'll just put it on this one. This is already running automated at a trading firm, but I'll put it on here. I don't like putting it on double size usually, but we'll just put on one full one here. That comes back there. I mean, again, the stop for the 1 is right on the edge of this. I'll try that one too, but this one's a little. I'm actually breaking my rules a little bit. And in my trading, there's no negative reinforcement. What's negative reinforcement? When you do something wrong, you can get away with it. Usually, if I break my rules, I get smoked. But this one, the entry's there, the stop's like right on the edge. I'll give that a shot too. We'll see. On the flip side, I'll put on reversion coming the other way.
Prior NT1 retested.
This is a prior. This is not the definition of an A plus reversion. Yeah, that's an event that hasn't really been retested, but it's not the prior event, right? A lot of stuff happens sometimes. We're looking for traders that are caught in like this here. These shorts went out as it comes back. Well, this stuff happened a long time ago. It will probably very likely bounce off of there, but that's not what the trade is. Doesn't mean you can't take the 1 ATR reversion though, because again, it happens on its own. This is normally would be an A plus. If this was the prior event, it's just not. But doesn't mean the ATR reversion is not going to work. The other thing I'd watch for are back in blacks off the strongest GEX level here. So say this market rips up here. See that the 2 ATR entries right there? I would take the 2, the 1, back to the zone. So we'll see what happens here. So again, I thought I put in more contracts to get out of my Izzy short and into the Izzy long. I never did it, but that was my entry point, and I missed it. I had a chance to get in, and I just missed it. So I don't have anything on long right now. Of course, it's going to rip off the page because that's what happens when I miss trades. Let's see what else is going on. Let me answer a couple more questions here. You guys are actually participating today. I love it. Oh, by the way, Rui market's going down to 52.12. Well, it's just rallied 30 points. Do you in your trade, or you just hold it until you blow out your account and your net worth? Like it was great. It was a great call while the market was going down, but now it's doing this. Are we still going down to 52.12? And where'd you get short, and where's your stop? So you didn't put any of that in. I'd love to hear why. Guys, I'm not ripping on. I'm referring to the traders in general that talk like this, right? I'm not really trying to single him out, even though I am, right? It's like nobody cares. Like, unless you're giving us a definitive reason. I'm showing you definitive reasons to get long, to get short, based on stuff that's happening in the market. Anybody can pull a call out of their ass. Who cares? Oh yeah, we're going down. It's like going to a roulette table. This one's going to be black. Well, you just keep calling black until it hits, and then say you're right. Like, it makes no sense, right? So if you're going to post your calls in here, tell me why. Tell me what your driver is, where your entry is, where your stop is, and how much you're risking. That's what I want to know if you're going to post that stuff. It includes my trading room. So Marcocoa is putting a different language in here. I don't even know what language that is, let alone decipher it. Corin, thank you, Scott. You're the absolute best. Thank you, Corin. Makes me feel good when people actually get some value out of what I'm trying to teach you, because I'm telling you guys this is the best edge I've ever seen. Again, anyone who doesn't know my story, I've traded millions and millions and millions of contracts. I used to be a huge scalper. I've seen so much volume come through the market. So it would behoove you to listen to me on what the driver is of these markets. It's volume, and it's mainly these SI events. So again, there's other market movers, algos, and market options dealers and stuff like that. But the point is, this iceberg stuff is the best thing I've ever seen in my life. So you can take it for what it's worth. Or Justin Williams, just to add for new people watching him in Scott's community, and you get a lot of support from him in the trade room, plus a lot of other community members. Thank you, Justin. And we got Scott, do you care about correlation? Yeah, correlation. I will trade bigger size, so on and so forth. But correlation as far as what? Let me know what you mean by that. Keel said BTC. I don't know if we had anything in BTC. So guys, I'm watching like 15 markets too. That's why sometimes it's very hard to follow what I'm doing. I'm not seeing anything in BTC. So the threshold in Bitcoin is 25, right? So if you see 25 or more, it's relevant size. You can trade the futures, or you could trade the cash off of it based on the same principles we're trading all these other markets. So you see, It doesn't matter what market you're looking at. If you understand the way these markets trade around these volume events, like here's your 1 ATR reversion, here's sell ice, like you can take position trades, you can take reversion trades. And even this might have been this is the great thing about month or Q2. Again, you get discounts in that document I posted. You get the GEX levels for wheat and soybeans, and look at this. This was a back in black. And I went a little bit through it, but you could have taken it off that guy, off of the GEX level. So the dealers are hedging there. Just another reason that it's going to come back to the zone, right? It comes back to the zone anyway without something, and then you get these other things. This is back in black. It's part of my reversion trade, my reversion course. Soybeans. There's some bias right here. Let's see if it was a GEX level. I'm sure it was, and then Mr. Sexy Gexy. Let's take a look. No Sexy Gexies, but you could take back in blacks to this. Right. All right, so again, I missed that ES long, which sucked because it's ripping. You guys, you see, I was short, and then I got out of my short, and I was supposed to be long, and I just thought I put more in. I didn't. But I let the volume events tell me. It doesn't mean the markets can't rip up on their own, but I trailed my stop to that. I actually made a little bit on the move down. I got out of the rest, still profit. And I'm supposed to be long here. This is already, if you did mirror my trades and listen to me and did something I didn't do because I just forgot to put more size in this trade when I got out, this is already a 17-point winner. And you see we're struggling right now too. So if you did get long off of this, you could say, okay, I'm going to follow Scott's areas he gets out. We have a spot gamma level here, and we have a prior event. I'm going to get out of some of my long right there. And you see this is right where it's respecting. Right? So this is why I get out at these areas. Not all of them, some of them. So if I was long right here, I would have been getting out of some there, and because of the spot gamma level. Corwin, absolutely the best edge by miles. Exactly. I've never seen anything more powerful ever. And I've been chirping it for 8 years. And I had Bruce telling me 8 years ago from Bookmap, you got to see this SI indicator. And I kept blowing it off. And I'm like, okay, well, whatever. Because I wasn't even going to trade stocks when I got back in the game because I was futures. So I was so jaded from the, being a multimillionaire to go and couldn't make $1 in the markets. So I wanted to trade stocks, change it up. And then the SI indicator came out and I said, this is the most ridiculous thing I've ever seen in my life. Bruce was telling me for 3 months before I incorporated it, and now it's been the crux of my trading for literally 8 years. So, again, you might want to listen to me when I tell you it's incredible. Nicholas March, new to your channel, new to your Bookmap, new to futures. Is it feasible to trade futures and be profitable while working a shitty 9 to 5? And there's plenty of guys 9 to 5. The goal is for me to teach you guys. You guys, I take great pride in educating, right? Because one, it keeps me grounded, right? I can't completely lose my mind on webinars, even though sometimes I do go on tilt. Two, you got to remember, my story is very resonating with people because it's not like I'm trading millions of dollars in 3,000 contracts like I used to, right? I went from rags to riches to rags, and I'm on my way back. How am I on my way back? Because I have this information. It brings me great joy to help you guys compete against the manipulators that blew me out of the market, that knocked me out of the game. I had to do medical sales for 6 years because I got knocked out of the game, right? So now that we can see what's going on in here, it brings me great joy to get you guys to where you can compete against the nonsense, right? You can see the manipulation. You can see the algos. You understand how these markets trade around these volume events, right? So yeah, you can definitely trade 9 to 5. All my Bookmap webinars are recorded too. I trade live every day. I try to get in there twice a day. I do an hour and a half in the morning, an hour in the afternoon. But the afternoons lately have sucked. So if there's no trade, I'm not going to just get on there and watch PayTrade. But you can see here, this is going, by the way, April 15th was my 4-year anniversary of my trade room. There's traders in here. If you go to my website, I've got a couple of them to do some testimonials for me, video. Go in here. Some of these guys have been in here for 2-3 years, right? If it didn't work, I wouldn't have a trade room for 4 years, right? And I wouldn't still be in the business, and I wouldn't have people in the room for 2 years, right? So here's just a couple. You click on the name, like I think Cian's been in here for 2.5 years, right? Click on the video and listen to what they have to say. So I asked those traders to do testimonials if they were doing well and they loved what they were seeing and loved the room, and they got on and did it for me. I appreciate that. But there you go. So yeah, a lot of those guys, back to your original question, is Nicholas, a lot of guys have 9 to 5s right now. The goal is to get you so you never have to work for the man again. You have this information and you know how to do this for yourself. You can do this, for yourself and trade for yourself and never have to work for anyone again. That's the whole goal. That's what I wish for all you guys. It brings me nothing but complete joy when I hear about traders making money. There's tons of traders that are making money in my room. They're doing the Apex stuff. That leads me to the Apex too quickly. I cover this every time. If you're learning, so perfect for you, Nicholas, for the Apex, right? So first of all, for any new traders in here, go to this. I'll post it one more time in here. This is all the stuff I use. Everything in here are discounts, right? So the first thing you want to do is go and get the Bookmap basic software. You get discounts to that here. You get the Global Plus. That's the one I recommend because you get a lot more like the sweeps and everything else. I'm not going to get into that right now, but that's what you want. Then you want to get the MBO bundle. MBO bundle is what drives that's the Stop Iceberg. So you get a lot more though. You get the on chart, the sub chart. We've been talking about the sub chart, but the zone drawing tool actually draws off the on chart. You get that, and you can use that too. But I use the sub chart because the zone drawing tool is the on chart information. Liquidity tracker, I haven't used that much lately. It's awesome too. It's just finding liquidity in the market because like we were talking about, it's like a magnet. Trader Map Pro, Market Pulse. So we haven't talked about Market Pulse too. So Market Pulse is Tick Strike. I was showing you Tick Strike. I still use Tick Strike, but it's this guy on steroids. What did I do with it? It's gone. Where did it go? Oh, it's right here. All right, so this is this, but Market Pulse, we can actually bring it up and see what it looked like down here. Let's bring up ES. So Bookmap made Market Pulse per my request. This was like 3-4 years ago because I said, could you give me something like Tick Strike that shows me history and stuff like that? And they built Market Pulse. They ran with it. Now it's like stuff I don't even really, a lot of their algos, it's like blows my mind. I never even would have thought of that stuff. So all these different algos are part of Market Pulse, right? So I use the volume, pressure, and balance, and I move it to an hour so I can see the most buying or selling in the last hour. That's important information too. It's not as strong as the SI stuff, Stop Iceberg stuff, but it's still important. So let's turn this back on. I had it off so it doesn't confuse people. So you can see right here, like this is one of the patterns, right? So this little blip, see that black blip? This was 97% of the most intensive selling in the last hour. How did that work out for him? Well, it actually triggered buy ice. So whoever sold here ran into a mouthful of buy ice and the market ripped away. So just knowing, say this ice wasn't here though, it was like kind of a double, and you see this is right where it's bouncing, right? Why? Well, because whoever just sold here had to hold their breath. This is how you got to think about markets, and it'll make it much easier for you. As it comes back down there, they're like, oh God, thank God, let me out of this trade, let me out of my shorts, and then it rips away. So anyway, you can use this stuff to add to trades. You could scalp off of it. I'm not going to get into it right now because traders are already confused enough with the basic stuff I'm doing. But this is relevant information. It's fleeting, right? And that you can get another spike here any moment. But Market Pulse is basically Tick Strike on steroids is what it is. So anyway, back to this thing quickly. I try to run through this every time. We only got about 5 minutes left. So you want Bookmap, you want the MBO bundle. This is what I recommend for you guys. If you're learning my stuff, yes, it's the best edge ever, but you're not going to understand. You don't want to be making mistakes and blowing out real money accounts. Go to Apex, Pulcini 50 for any sale they have on. I think they have, I think it's 80% off right now. Right, Apex Trader Funding. This is the one that I put my name behind. I've been using it for over 3 years. Been paid multiple times by them, over 10 times by them. I've blown out many accounts too because the one that you got to realize though, if you do these things is if you don't hit, these are trailing, like for most of mine are the 150s, right? So if you do the 150, it's not 150, it's 5,000, right? So remember I showed you my risk thing where I set it to 5,000. So anyway, you got to make $9,000 before you lose 5. Well, the 5's trailing too, so you could be up $8,800, $200 away from the 9,000. And this has happened to me plenty of times too. You pull back the 5,000 trailing, you're still up $3,800. And you lose the account, right? And this goes for the live stuff too, which is, I think that's the ridiculous part of all. They all do the same thing. But the point is, if you're working on your trading, you do have some skin in the game, very little, right? So for instance, the 150 right now, I think costs you $60 to get the $150,000 account with the 80% off, right? Well, if you blow out the account, you lose $60. You're not losing $5,000. See what I'm saying? So it's great to work on your trading, and then all of a sudden, if you do one of these and you do well, now you're funded. And then you don't have to put your own money up anyway. So to me, it's a no-brainer. This is the company I put my name behind. I've used them for 3 years. Many traders in my trade room have been paid out. They have the PAs, the live accounts, so that's what I put my name behind, and that's what I recommend you guys do before you start trading your own money. Yeah, the goal is always to get to your own, trade your own money, so you don't have trailing stops and you're sharing revenue. I think the first 25 grand, you get 100% of your profits. But after 25 grand, you got to share with them. So, if you have your own money, you don't share with anybody. But I would not be doing your own accounts until you know what you're doing. This is Mentor Q stuff. This is, all those GEX levels. These are all the discounts to that, the yearly, the month. Actually, I got to change the yearly. The yearly is at 40% off. I'll change that in here for you guys. I'll do it right now while we're on here quickly, because he just shared it with me. I just did a Mentor Q, by the way. Most of these webinars that I do, they're on my YouTube channel. Just Google my YouTube. Or again, if you go to my website, go to the bottom, and you see I haven't put that most recent Mentor Q, but if you go to the bottom here, so these are all the discounts that are in the document, by the way, the trading strategies and the courses and stuff. But here's the Mentor Q. But if you go down here, so you can see these are the most recent webinars I've done too. Let me post the, I'll fix that. But if you want the yearly Mentor Q, which is a great deal, it's 40% off. I'll put that link in. And then the rest of this stuff, Spot Gamma, this is 50% off the first month. I use Spot Gamma, just, it's just as important as Mentor Qs. They have their own gamma levels, and then they have the hero that we looked at, right, when it finally did rip up. Actually, what happened after that? Just want to see something here.
1 minute till we get to
So we did see that rip, right? The market did move $1 billion, and that caused that rip. I don't know if that was the exact thing. I think there was news too, but the point is, you want to pay attention to that because that could cause rips in the market because there's dealers hedging. I still think that was a news story. All right. Oh, here is the A+ reversion I put on. So I'm okay with taking that. Again, you want the stop to be outside of the prior event. It's real close. I'm okay with that. So this is the A+ reversion, right? It already hits these ones, the twos, and the threes, comes back to the zone. It's even more powerful when you have a prior event that it has to get through to stop you out. That's the whole idea, right? So I put that one on. If I get stopped out of that, I did kind of break my rules, but I will definitely put the 2 on back into this prior event. That's A+ reversion. That's part of my, what's in 10 seconds? What's the number here? Oh, 5-year something. All right, so I got the reversion on. And guys, if you got long here off of this guy, that was your entry. You could have gotten to see where this stopped. You should have been out of some there. I already went over this and Spot Gamma level. You get out of some, and then if it comes back and this turns out to be a bearish event, then you stop out there. And actually, I could take shorts here too. Let's just take a quick look because I know how everyone loves to trade the ES. Let's see what's down here. That was close to that zone. Again, these are zones; they're not exact prices. I did take the stop busy earlier, so I guess I should be taking this one. So this would be a broken ice setup, right? It's not quite there, but this buy ice event. If this fails, now I'm going to turn around. Remember, I should have been long. I just didn't put on the right sizing here because I wanted to get out of my short Izzy and get into the long. But anyway, this is pretty much Izzy. It's not quite to that zone, so it is a little iffy. But you could put the Izzy short on. But I do have the reversion, and I don't want to jinx it here and see if we get filled. I was about to say, come on. All right, there you go, guys. That's the A+ reversion, right? We've already seen 2 or 3 just that we put on. What I put on one, I think I put what I do earlier, gold, or that was the back in black off the GEX level. But that's the A+. Tags the ATR to the tick, by the way. There's a reason that we have these lines. You will be amazed. Like you saw the YM trade today. I mean, it's to the tick. It's nuts. It drives me crazy, but they're so accurate. It's just silly, right? Even when you put on a trade, it's like you'll get filled and they'll do that. And like, come on. Anyway, that's the trade, guys. That's the A+ reversion trade. In, out, winner, winner, chicken for dinner. All right, that's a good segue to end the webinar. Anyway, this is the rest of the stuff I use. The tick strike. All this stuff has discounts to it. Ludwig levels. So you saw it on the Bookmap webinar. You should get special pricing. And then reviews, you want to go to Trustpilot, there's one jackass in there, but everyone else is very, it's truthful. I want you to be truthful, but there was one guy that literally was just a moron. I don't run it. I'm very blessed. I very rarely run into a jackass in my trade room. That guy was king of the jackasses. All right, guys, I do this twice a day, every day, most days. Again, if there's trade in the afternoon, but I do this exact same thing all day, every day to teach you how to do this for yourself. See if there's any other questions quickly.
They named all this.
Awesome. Currently looking at your website. Appreciate your knowledge. Shirley Farbade. Scott, I'd like to know your opinion about trading indices between NQ and AS. Which one do you prefer? I prefer NQ. I trade them both. Guys, don't pigeonhole yourself into one or two markets. This stuff I just showed you just on this webinar. We took gold. We took a crude. I missed a crude sexy Gexy down here, right? Like wheat, soybean. We missed the A plus, and I think it was wheat. Don't pigeonhole yourself into the equities. But yeah, I like NQ more than I like ES most times, but it's the same stuff. If you know the thresholds, you know the rules around these SI events, then you have yourself a trade. But if you have the bandwidth to watch multiple markets, the more markets you can watch, the more opportunity you're going to have. On days like this whole week has sucked for equities. They've basically done nothing. Yesterday it sold off a little bit, but it's been like this. So when the equities suck, head over to, like I put on a copper trade yesterday on my AM webinar. It was a huge winner. Or head over to soybeans. I took a soybeans huge winner 2 days ago on the webinar. It's like, don't pigeonhole yourself into one or two markets. But if I had to make a decision between ES and NQ, I'd pick NQ. It moves. I mean, yeah, it's very volatile, but it doesn't matter how volatile it is. This is all adjusting to everything. This thing could have. We saw in the tariffs 200 ATR in here, 180 ATR, meaning it's rotating 180 points every 5 minutes. This zone drawing tool adjusts to all that. So you just put the trade on. It gives you your position sizing. It tells you where you get in, where you get out, and you let the trade. I don't care what the ATR is. See what I'm saying? I do care about the tariff headlines that you can't predict. Those suck, but that's just part of the markets. All right, I'm out of gas. Hope you guys got something out of this. I do this every day. Head over to my trade room, and I will see you guys next Thursday otherwise. Thank you.